Good morning. We will pay attention to the debtors age analysis today. The following information is available on 31st March 2016. Credit limits and credit terms. It is the policy of the company to grant debtors a credit limit of 15,000. That means they are not allowed to buy for more than 15,000 on credit, and they have to pay their accounts within 30 days. The balance of the debtors control account at the beginning of April was 21,250, and then they give us information up to the end of the financial year, that is 31st March 2016. The total sales for the year will be 480,000, so it's possible that you have to calculate this by 12 to see what is the amount per month. So look at this immediately and realize this is the total amount. It will not only be for 1 month. Then sales occur evenly during the year. That's another indication that this total sales of 480,000 will be divided by 12 to work out what is the amount per month. 25% of the sales will be for cash. That means the percentage that will be on credit will be 75%. The debtors payment details: 30% of the debtors will settle their accounts in the same month as the sales transaction. So if you sell something to them in April, they will pay for it in April. And the reason why they are prepared in the same month is because they will receive 2% discount. In the following month, 50% will settle their accounts, and the month after that, 15% will settle the accounts, and they budget for bad debts of 5%. They give us the debtors age analysis for the different debtors. In this case, we've got 5 debtors. What is the total amount? How much do they owe currently? How much do they owe for 30 days, 60 days, more than 60 days? So this is an indication to us that the more than 60 days and 60 days are taking too long to pay their accounts. Then the debtors control account is also given to us at the beginning of the year and at the end of the year. What is the closing balance, so that we can take this debtors control account into account when we do the question. What do you know about the National Credit Act? This act seeks to eliminate reckless granting of credit, so that businesses don't just give credit to anybody that can't actually afford to pay this money back. So they have to investigate before they grant credit to ensure that the people can actually afford to pay for the goods. And they are not allowed to increase the credit limits more than once a year without the express permission of the customer. So if the customers don't give permission, they're not allowed to increase the credit limits more than once a year. On the affordability side, it falls to the credit provider, that means the business, to check whether the customer is capable of repaying this credit and the interest rates. So if they obtain a loan from a bank, the bank must make sure that they will be able to pay the monthly installments to repay the loan, and that they will be able to pay the interest rate every month. One of the best ways of assessing a customer's likelihood to be able to pay is to use the information collected over recent years by the credit bureaus in South Africa that keep a database, and to use your own customer information. So you must, when you read this information about the National Credit Act, you must sort it out and see what is the purpose. What must they look for before they give credit, and how can they do this research? So that's why I colored it in different colors, that you can see what is the different important sections in this page. How can the preparation of a debtors collection schedule and debtors age analysis assist in controlling debtors. If you do a debtors collection schedule or a debtors age analysis, it means that you budget how much money you will receive each month. So you can anticipate your cash flow that will come into the business as a result of money paid by the debtors, because you have to take this into account to be able to pay your creditors, your liabilities, and your expenses. Ensure that debtors keep to the agreed credit terms. So because you do this, you can see immediately, according to this debtors age analysis, when someone takes longer than the required time to pay, and that means you must take steps immediately. You will budget for your own expenses to have money available for creditors and expenses to pay according to this collection schedule. Budget to receive money accordingly to prevent cash flow problems. Debtors age analysis. An effective method of credit control to ensure that debtors pay within the required time, so that you can take action immediately if they don't comply with the credit terms, so that you can minimize bad debts, or you can allow discounts because they pay quickly and you want to get the money in as quickly as possible to prevent cash flow problems. You can charge interest on overdue accounts to encourage debtors to pay within the required time. Send out regular accounts or reminders. Phone or send SMSs as soon as you see that the payment of a debtor is not paid in time. So the big advantage of this collection schedule is that you check on your debtors every month to make sure that they are paying in the required time, that they keep to the credit terms. If they don't, what action should be taken to prevent this? So either allow discount if they pay within the first month, charge interest, and you have to take action, contact them immediately to prevent bad debts. Why should the balance of the debtors control account correspond with the debtors list? The debtors control account is a summary of the total amount owed to the business by all the debtors. So the debtors control column in every journal will be posted to the debtors control account. In the cash receipts journal, we have a debtors control column. The total will be taken to the debtors control account. In the debtors journal, we have a total for the total sales that will be posted to the debtors control account. The total of the debtors control account are posted to the debtors control account. So that means every time that column total will be taken to the debtors control account. The individual amounts in the journal, so in the cash receipts journal, you receive money 4 times during the month. All those individual entries will be posted to each individual debtor's account in the debtor's ledger. That means that the debtor's control account is a summary of all the entries in the debtor's ledger, because the individual entries in the journals are posted to the debtor's ledger and the total of the debtor's column is posted to the debtor's control account. If you add all the balances of the accounts in the debtor's ledger together, it should give you the same balance that you find in the debtor's control account. If it's not the same, then it means that you made a mistake somewhere and you will have to investigate. This balancing of the debtor's ledger and comparing it with the control account indicates that the accounting was most likely correct and that you didn't make mistakes. Calculate the expected monthly collection of credit sales for April, so for inclusion in the debtors collection schedule. Total expected sales for the year is 480,000. That means, first of all, I will divide the 480,000 by 12 to determine what is the amount per month. Then they said to us that 25% of the sales is cash and 75% is on credit. So of this monthly amount, we will work out 75% of the 480,000 divided by 12 will give me 30,000 rand. In the same month, they will pay 30% to obtain 2% discount, the next month 50%, and the following month 15%. That means in the same month it will be 30%, the following month it will be 50% that you will receive, and then you will receive 15% in the following month. And in the same month, we will give them 2% discount. So of this 30,000 that we sold in April, we will receive 30% of that amount. And because we give them 2% discount, we actually only receive 98% of the 30%. Or you can say 30% of 30,000 will give me 9,000 rand. Then I work out what is 2% on 9,000, gives me 180, and I subtract that, and it will also give me 8820. The following month, they will receive 50% of the 30,000, and the month following, they will receive 15%. So to make it easier for yourself, write down above the debtors collection schedule how the payment will be, that you know immediately. If we sold in April we will receive 30%. Although we sold in April, in May we will receive 15,000. Of the 30,000, we will receive 15% in June. So then you know exactly which month you will receive the money. Calculate the average debtors collection period in days for the year ending 31st of March. That means we will take the debtors opening balance and closing balance and add the two together, divide by 2 to work out what is the average. Multiply with 365 days in a year, and we take our total credit sales, and the total credit sales was 480,000, and 75% of that is on credit. So I take the average of my debtors. Where do I get these figures? In my debtors control account, they give you the opening balance and the closing balance. The 480 was given. The credit sales is 75% of the 480,000, and that will give me an answer of 31.9 days. Okay, so the money can be determined. How much will we receive every month? That's what we do in the debtors collection period, and we can calculate what is the average time that people take to pay. So although they say within 30 days, in this business it takes 31.9 days for them to pay. Do you think he should be satisfied with this collection period? You can either say yes or no. So you can say yes, it is very close to the terms of 30 days because they take 31.9 days. If you say no, you say they didn't pay within 30 days. Indicate 2 measures that can be adopted to improve the collection of debtors. Proper screening of potential debtors. That means before you allow credit, you must ensure that the people will be able to pay their debts in the required time. So you must test their creditability and do some research before you just allow credit. Allow discounts for early settlements to encourage them to pay as quickly as possible. If their accounts are overdue, you must charge them interest, so it's a negative figure for them because now they have to pay more. And you must send out regular accounts or reminders so that they know that you are looking at the account and you are asking them the whole time for the money. Referring to the extract headed the National Credit Act, explain 2 points of these regulations that apply to Ruth's business. Credit should only be granted to those who can afford it. So you have to go and look and see if they can afford it and will they be able to pay it back. Potential customers should be thoroughly screened before credit is granted to ensure that they can afford it. Credit bureaus can be used to check on the potential customers. You can use your own information to check on your potential customers. What is the purpose of the National Credit Act? The Act seeks to eliminate reckless granting of credit by businesses, so they don't just give credit to anybody, and in the end the people are not able to pay all these debts. That includes extending credit to people that can't afford to pay it back, so they should not give credit to people who have small salaries or who are not able to pay back the money. Businesses are not allowed to increase the credit limits more than once a year without the permission of the customer. What is the responsibility of the business according to this Credit Act? It is the responsibility of the business to determine whether the potential customers can afford credit. It's also the responsibility of the creditor provider to check whether the customer is capable of paying the credit and the interest on the credit.